Hey, what's going on, everybody? Welcome to the Trading Part-Time University. Today is Wednesday. This is the Advanced Technical Analysis class. Today's February the 6th. It's a little bit past 9:30 in the morning. And before we begin class, let's go ahead and jump into the ever-famous disclaimers. Number one is I do not promise that you're going to earn a profit if you purchase a stock or a bond. It's recommended that you're going to trade. Please do so with caution. We're going to be looking at the Paper Money platform today. We might even be looking at my Real Money platform, not a recommendation to buy or sell. Everything we look at is for illustrative purposes only. Okay, understand that there's risk involved in trading and make sure that you take those risk factors into consideration when investing or trading. And again, everything today is for educational purposes only, not a recommendation to buy or sell. Take a look at the rest of the disclaimers. And all right, everybody. Welcome to class today. Like I said, today is the Advanced Technical Analysis class. We always like to start off talking about iron condors, but what I would like for you guys to do is type in any of your questions that you might have, and we can go from there. So please type in your questions. And then while you're typing in your questions, I am going to pull up the Real Money platform, the Real Money, and I'm going to close some of these windows out. I don't want to look at that, it just distracts me. So let's go SPX, and we need the SPX to have itself a nice little pullback. The SPX is kind of long in the run, been running up. We need to see this roll over for our iron condors. But anyway, let's go ahead and go to the tab that we always do, SPX. Okay, pull up the trade grid, and then I'm going to talk a little about. Remember, guys, the iron condor is a neutral strategy, and it takes advantage of sideways movement. But here's one thing to understand. When the market is in an extreme uptrend, that's tough to make money in the iron condor. When the market's in an extreme downtrend, that's tough to make money in the iron condor. What we want to see is the market to go up, go down, and kind of just stay in our range, right? Stay in our range, which up until here recently, it is not stayed in our range. Look at this move. It's just been going up, and it's hurting one of our legs up here. We'd like to see this roll its butt back over for the next 2 to 3 days, and we will be looking good. But again, today is a bearish day. It's a bearish harami, so hopefully that helps us out. But anyway, it doesn't matter because this strategy is a high probability strategy, and we're looking for an 80% return, and so we're going to place it on. And again, this is what we do. So if you look at our Iron Condor tab here, well, let me do this. Let me see if, hang on one second here. Let me go to this one. I think it's on here. I've been doing some naked strangles as well, guys. Naked strangles. I don't think I have it on this one. Options on futures. Okay, so yeah, let me go back to the other platform. Okay, so like right here, if you notice here, we still have 7 days left in our first one. Okay, 7 days left in our first iron condor. We have 14 days in our second one. So now we're going to place another one. Okay, we're going to place another one, and we're going to follow the same mechanics. This has nothing to do with the chart. All we're doing is going on Wednesday. Very important. Today. And it doesn't have to be this second. It could be later on today. But we need to do it on Wednesday, and we're looking for 21 days. 21 days, okay? So this one's going to be the 27th February 19, 21 days to expiration, okay? And then we're going to go here, and I just like to do the delta probabilities out of the money, all that good stuff. Okay, so what I'm going to do now is we go up to our strike price, because I have here that it's only showing 14. I want to see a lot more because I'm looking for that 20 delta. This says 34, so in order for me to see the 20 delta, I'm going to go about 50 strikes out. Okay, you don't have to go quite 50, but I'm just doing it 50. That way we have a bigger option chain. And you guys know what we're looking for is the 20 delta. So here we go. Again, that's all we're doing is placing this trade every Wednesday. And our goal of this strategy, once all of these start to expire, Once all these start to expire, we'll be having income coming in hopefully every week. Now, are we going to win all the weeks? Of course not. This strategy is an 80% probability strategy, which means there's still 20% probability that we're going to not hit it. Now, in full disclosure, I'm going to tell you this right now. One of the things that I like to do is, here's the deal. Let's look at the red line as the strike that we sold, okay? This is what our iron condor looks like. We sell a strike and we buy a strike for protection. We sell a strike and we buy a strike, okay? So, here's what we do. Now, right now, the market is above our strike. That's not good. We need it to fall below it. So one of the things that I am going to do, Ashley put in the chat, what is the importance of putting these on Wednesday? Well, the importance is, when I was taking my technical analysis class, my coach came up with that strategy like 3 years ago, and for some reason, he picked Wednesday. He picked Wednesday, I guess, through all his back testing, and then we had a class every Wednesday we would do our iron condor. And it was just through all his different back testing, he liked that 21 days. And since our class was Wednesday, he always did it on Wednesday. So will it work in other days? Maybe, I'm pretty sure. But I like the fact that he basically back tested it and worked it for 3 years. And so since I'm used to that, that's the way. But that's really the significance. I think the main thing is the 21 days. But you can't place these trades every day. I mean, you can, but the amount of money you would have to have is crazy. So that's really the only importance. Okay? So I just like the Wednesday 21 days. It has worked for the past, in this case now 6-7 years. But so I'm just continuing. It's repetition for me. So here's the thing. This is, now I'm going to tell you a couple things that are important. New traders, once it comes to, this is going to be our rule, once there's 2 days left to expiration, remember, we start off with 21 days to expiration. 21 days, this is very important, guys, because we're not going to be in class when these 2 days are up. Yeah, it just worked, so hey, we just do it, girl. Here, y'all need to write this down. This is very important. Our goal is to let these expire worthless. What we mean by that is if this stock or the SPX is in here when it expires in 21 days, we're going to get full gain. So what we're going to do is when there's 2 days left, please write that down. 2 days left. So right now there's 7 days. So this is in 5 days. So it would be Thursday, Friday, Saturday, Sunday, like Monday. It'll say 5 days on your option chain. So 2 days left, not 5 days. It'll say 2 days left. This is what you're going to do for beginning traders. Whatever, we're going to call these the legs. These are our legs, right, of the iron condor. These are our legs. So we have this is the call leg, and this is the put leg. If in 2 days you're losing on one of these legs, which means right now we're losing on the call leg. We're maximum gain on the put leg. What you're going to do for beginning traders, if you're losing with 2 days left, you're going to close. You're going to close the losing leg. Okay? You're going to close the losing leg. I'll show you how to do that. We're not going to do that right now because we still have days left. But you're going to let the other one expire worthless. So if the market is up here, and I'll even put it in the chat, the WhatsApp group. All right, guys, close the losing leg. Okay, if that happens. So we're going to take maximum gain on this leg, but we're going to suffer on this leg. That's for beginning traders. That's what I'm suggesting you do. Now, me, in full disclosure, I am not going to do that in my real money because I am going to manage. This is a more of an advanced technique. I am going to manage the losing leg. Okay? That is way more complicated and there's more risk involved. So there's things, again, I'm not worried about it yet because if we have a couple of down days in a row, then we'll be right back in maximum full gain. But just in full disclosure, with 2 days left to expiration, if I'm losing, I'm going to begin my management. And there's a lot of things that I'm going to do. I'm not going to talk about it much, but there's things like we call it roll it to buy ourselves more time. So, things like that. And what I might do when that happens, if it happens, is make a video. Because again, if this goes down over the next couple days, it won't matter. But that is very important. This leg down here, I'm going to do nothing. But if I'm losing on one of my legs with 2 days left to expiration, then I slip into management mode. And I'm going to work myself out of that loser. But beginning traders will just close out the leg. Especially if you're new to this strategy, which I think all of you are. I'm going to erase this. 5, 4, 3, 2, 1. But let's go put on another one right now. Right here. Okay. So here we go. 21 days to expiration. We're looking for the 20 delta. So closest to 20 delta. So I'm going to pick this 19 delta. If you see here, we have a 21 delta and a 19. I'm going to try to see if I can get my credit with this 19. So I'm going to write this down. So everybody write down. Now, again, if you're not putting in this trade right now, then this might change later. But what you're going to do, we have a 20 delta now. See, it's 20 delta. You're going to be looking for the 20 delta. 20 delta. If you don't have a 20 delta, like it's 21 and the next one's 19, I'm going to go under. Like I'm going to do the 19. So I'm going to do the 260. So I'm writing that down. The 2655 put. That's the one I'm going to sell. So I'm going to right click right here. The 2655. Right click. Sell. Iron Condor. Okay? A lot of things pull up. So we're going to sell the 2655. Now, if you're doing the SPX for bigger portfolios, we'll do the SPY as well. 2655. Then we're going to buy the 2635. Okay? Write that down. 2635 we're going to buy. So we're going to sell the 2655 and we're going to buy. I like to do 20 points wide on the SPX. Okay? We'll do the SPY as well. So now I go here. We're selling the 2655 put and we're going to buy. So you have to make the adjustment. The 2635. There it is. That's our put leg. The put leg is the bottom leg. We're selling a put and we're buying a put. Okay? Practice it in paper money for sure. For sure. Don't just not practice it. Okay, now let's look at the call side. So we're going to go now to the call leg. We're going to go down and we're looking for the 20 delta right here. It's the 2795. 2795. That's the call that we're going to sell. So we go here and we go 2795. Okay? 2795. Now this turned green. Don't worry about that because we haven't adjusted the other one. So 2795. And what we're going to do is we're going to buy. So if we're doing the 2795 on the call side, we're going to go 20 points up. So 2795 plus 20. I got my calculator. 2795 plus 20. It's 2815. 2815. Okay? So I go here to my call side and I'm going to buy the 2815. Just write these numbers down. Oh, Do I have a 2815? Hang on, did I do that right? Hang on a second. 2795. We don't have a 2815. So since we don't have that strike, that's kind of weird. Then what I'm going to do is I'm going to pick a different leg. So I'm going to do this 2800. So we're going to change that. We're going to sell the 2827 right here, right there. 2800. Okay, so again, we'll run over the numbers again. Don't worry about it. So I'm going to go here because we didn't have the 215. So I don't like that. So now I'm going to buy the 2820. And we'll run over the numbers again. Don't worry. 2820. So here we go. That's how it looks. I don't know if we got enough credit. We're going to check it out in a minute. So what we've done right now is we're looking to sell the 2655 put, and we're looking to buy the 2635 put. On the call side, scrolling down, we're looking at the 2800 call to sell and the 2820 to buy. Okay, that's our numbers, and that's what this shows you right here. You're selling the 280 call, you're buying the 2820. Mine doesn't have the one you are using, delta probability. If, for example, up here in the layout, if you look at the layout, what you can do is you can customize it. So go here to customize, and then you can add anything in here. So like, for example, we've got the delta. Let's say I wanted to add theta, because I like to look at it, because theta is time decay. So I can go down here to theta, add. So let me go up here, add OK, and then it adds theta. And I want to save the workspace as save. Cool? Yeah, so all you do is you add them here, and then you can save as, or you can save it right there. So I've got delta, theta, probability out of the money. Look at this. I'm going to add one more. Let's go to customize. This says probability out of money. What we're going to look for is probability in the money, okay? And I'll show you so that way we can. So what we have, guys, is we have delta, theta, probability out of the money, probability in the money, return on capital. Hit OK, and then you're going to go here. See, this added this. This is how much money we're making on theta because this is a selling strategy. You go to save, and then it shows you delta, theta, probability out of the money. I'm going to save that. Okay? Now, these numbers might be changing because I wasn't looking, so let me go back and just make sure we're still looking good here. The delta, the 20, the 2660. See, it changed on us. So now I got to go back and redo these dang numbers. This is my real money, so I'm being very cautious. 2660, that's the one I'm going to do right now. Remember, it changes. So I'm going to sell the 2660. 2660, and I'm going to buy the 2680. Boom. Okay? Then, so the 2660, oops, sorry, the 2640. That's why when a market's moving, it's tough. So what we're doing now is we're selling the 2660, the put, and we're buying the 2640. Let me just check the call side again. Again, since it's my real money, I'm being very cautious. We're going to leave it at the 2800. Okay, so here we go. We're selling the 2800. We are buying the 2820. I'll answer your question in a minute, Eddie, but I want to place this trade before it changes again. 2660, and we're buying the 2640. Okay, this is our iron condor. Now, it's 540. So let me hit confirm, and let's see if we're getting the credit. So this is $540 is the maximum profit divided by 1,460. That's a 36% return, okay? That's a 36% return. I'm just making sure that I get above a 30. So we have a 36% return in the next 21 days. That's good. Let's just look at our probabilities really quickly. These are the columns that we come up with. Right here, our probability is 78%. Okay? So in this case, it's not quite 80, but we have a 78.94% probability with a 36% return. Okay? I like that. So do y'all like that? 36% return with an almost 79% probability. So before the market changes on me, I'm going to hit confirm. I'm going to go back up to my 540. I'm going to try to work the market a little bit. Okay. So I'm not going to get filled right away because I'm trying to get $5.45 credit. So we'll monitor that in a couple minutes. Now I'm going to shift to paper money because I want to place the SPY trade. So if you have a smaller account, you're going to go to SPY. Okay, SPY. Have those for Iron Condor only or all option analysis? I get the option question, buddy. Let me just hang on. Okay, so 21 days. So for what do you got, guys? Now you're going to the SPY. This is for smaller accounts. I did the SPX. It's for bigger accounts. Okay, so what you're going to do is you're going to do the same thing I just did. You're going to look for 20 delta, so let's add some more strikes. Ooh, not 540 strikes. Let's add some more strikes. Okay, so this is what the majority of you will probably do. Here's our 20 delta right here. Okay, here's our 20 delta. Now, if you notice, I want to do the 2655, but they don't have any 55. So what I want to do is I'm going to go down to the 2650. I'm going to sell. This has an 80% probability. The 265. Right-click on the 265, sell Iron Condor. Sell the 265, and then we're going to buy the 263. Okay? Sell the 265 put and buy the 263 put. On the call side, go down to here, and I want you to do the we're going to try this one, the 280 call. 280 call. So you're going to sell the 280 call. 280 call. And you're going to buy the 282 call. 282. Just write down the numbers. That's all you need to know. Okay? That's it right there. So here is our leg. We have an 80% probability. 80. We're going to sell the 265 put, and we're going to buy the 263 put. We're going to sell the 280 call, and we're going to buy the 282 call. 51 cents is our credit. So when I hit confirm, it's $51 is our profit divided by 149. That's a 34% return. So we got a 34% return with an 80% probability. Huge. I'm going to do 2 of those for this class. I'm risking $300. So if you're willing to risk $300, the profit is $102. It's a 34% return. So I'm going to send it to see if I can get the credit. Now let me go ahead and ask some questions. Now you don't get filled right away. We're going to have to work it a little bit. So we're trying to get the midpoint. So let me go to the questions real quick. Your credit, if it's different, okay, if it's different, for example, it might look like this. Working orders, right-click here. If it's different, yeah, you got to work it a little bit. Just move it. So like if yours says 48, then just work it up. I don't remember where we were, but yeah, you can adjust the credit. I think we were looking for a 51 cent credit, right? 51 cent. So if this doesn't fill at 51 cent, let's drop it down to 50. Because 50 is still a 33% return. So I moved it down to 50. Okay, so we're trying to get 50 cents. Let's try to confirm that one. See if we fill. Not filled yet. So if it's different, yeah, we're going to try to get 50. And again, we'll monitor it because the market's open. So we might not get filled right away. All I know is with a $2, oh, we got filled. Okay, so here's what we got. We just got filled right here. SPY. So this is what we got. We did an Iron Condor, and on the put side, we sold the 265, we bought the 263. On the call side, we sold the 280, and we bought the 282. We got 50 cents credit. So if you go right here, just to show you, let me create duplicate order. 50 cents credit is 100 divided by 300. That was our risk. $300 to make $100. That is a 33% return. So we're shooting for a 33% return on our money in 21 days. Okay? The probability is 80%. So we have an 80% probability of success. So, I don't know about you, but that's pretty great. We have an 80% chance to make 33% on our money. Huge. So get them on everybody else. If you're not filled yet, then put the order adjusted to credit 50 manually. Okay? I'm going to go take a look at my real money really quick because I haven't got filled. So right click, boom. Now I'm going to go down to 535 and I'm going to see if that's still giving me my percentage return. That's my real money of full disclosure, not a recommendation to buy or sell. 30. I'm going to try to work at that. 535. Okay, so I got filled. Now again, full disclosure, this is my real account. Real account. I'm not telling you guys stuff that I don't do with my real account. When I send you guys alerts, they're my real account. And if you were to follow those alerts yesterday, you'd be up handsomely. And we're going to talk about that in a minute. But this is what I got filled on the SPX. So if some of you, and I know some of you got big accounts, so this is what you can shoot for in real, well, I can't recommend you real money, in paper money. Let's take a look at it. This is the SPX. Same thing as the SPY, but 5 times the amount. Okay? So this SPX is 5 times the amount. So what I got filled at in real money, in full disclosure, is I sold the 2660 put. I bought the 2640 put. I sold the 2800 call, and I bought the 2820 call. I got a credit of $535. So I'm shooting to make per week, my goal per week on average is about $500 a week with this strategy. Now again, this is more, but again, we're going to lose some. But this is what I'm shooting for on a weekly basis. Okay? So if we get $500, a week, that's $2,000 a month. Again, we have all of our other stuff, but this is just a low maintenance strategy. This is what I'm shooting for a week. And I understand it's an 80% probability. $5.35 credit, yes. And in option terms, if it's $5.35 credit, that means $535. That's my maximum gain. But understand this. If I right-click and create duplicate order, my maximum loss is $1,465. That's my maximum loss. Again, when you're doing a selling strategy, okay, selling strategies are high probability. It's easier to make money as a seller than a buyer. That's just the way it goes. Okay? And so that's why you risk more to make less, because it's a high probability. But again, this doesn't mean that I'm going to suffer maximum loss. I've already told you, if I'm losing, I will slip into management mode and I will work my way at least out of some of it, or hopefully all of it. But I'm not worried about that yet, because I ain't going to worry about adjusting legs unless I have to. Okay? So that's what that looks like. On paper money, this is what we got filled at on paper money. This one right here. SPY, 50% credit. Now again, you're risking, in this case, 2 contracts, you're risking $300. So if you're willing to do $500, then you can do 3. Okay? If you're willing to risk $500, then you can do 3. Max loss $450, maximum gain 150. So just plug in the exact numbers, okay? Any questions on this iron condor other than, if I haven't answered it yet? Oh, okay, you were referring to me adding theta and in the money to your columns. Yeah, I like theta because theta's time decay. So look at this, guys. Check this out. This is what I want to show you. This is a selling strategy. Selling strategy. I sold an iron condor. So somebody type in the chat. If you're selling an option, is theta working for you or against you? When you're selling an option, is theta working for you or against you? Theta, for those of you that are new, is called time decay. Options have time decay, which means they bleed out. Okay, go back to a lot of the videos in the option class, plus I have documentation. But yes, they're working for you. So, if I go down here to the bottom, here, and I go to right here, and I right-click, and I just highlight this. Right-click, move to, I don't have an iron condor, so I'm going to add a group. And I'm going to call this group Weekly Iron Condor. Okay, boom. Then if you go back to the top, we've got Weekly Iron Condor right here. I just added it to that group. Okay, added it to that group. Then, if you want to customize this column here, this is what you do. You go here to this wheel, and you click it. And then what I'm going to add is I'm going to add the delta. So you got quantity, days, delta. I'm going to add trade price. And then I'm going to add theta. Okay. Theta. Quantity, days, delta, trade price, theta, mark change, percent. Okay, boom. So now what I want you to see, look at the theta column. Theta's time decay. Somebody see this right here? Okay. The 1. Okay. That represents, well, it's going to constantly change, but it says we're losing $1 a day in theta. This always changes because it's a selling strategy. It's pretty much neutral, and it changes all the time, but the reality is, see, look how it's now 92. Theta, and it's probably showing that because we still, once you get into a trade, you automatically pay commission, so you automatically start off negative. But theta is going to be helping you out, okay? But you don't really need to know. All you need to care about is right here. How many days to expiration? And then you're going to go to your chart. So let's go ahead and go to our chart. So make sure you got those numbers down. The numbers are 2500, 2520, 2720, 2740. Okay? So let's go to our chart. Let's go to the SPY. And you can do this on your other chart as well. Now, there's a lot of stuff because we have a lot of legs, so it's going to look really messy. But I'm just doctoring them up because once our other ones fall off, these will fall off. You know what? Since this is paper money, then what I'm going to do is I'm just going to erase. I'm going to erase these. Okay. I'm going to start over because on my real money I have it. So this is what you do if your charts are clean. So we're going to take those numbers. And we're going to go down here. Or in your case, if you're on the toss chart, you're just going to draw a line. Like draw a line anywhere on the chart. And then you're going to, let's do this. I'll do it on this chart. How does that sound? So y'all can, I'm going to change my chart. So this is what y'all's chart looks like. Daily. Let's go here. We'll go time seconds going on here. Let me switch to my black belt. Black belt is one of my charts. Oh, there it is. Of course, it worked right after we did it. Kron's getting punished. All right. Let's go to the daily. So here's what y'all just did. So let's go ahead and put those numbers on this chart. So what you're going to do is, your chart will probably look like this. So you're just going to right-click, add drawing. This is how I know how to do it. There might be an easier way, but this is just how I know how to do it. Okay, and then I'm just going to draw a price level. Okay, just anywhere. Just draw a line. Then you can right-click it, and you can extend it to the right. That's what I'm going to do, and it'll go all the way. So then I'm going to do a duplicate drawing. Okay, just bear with me for a second. Extend it to the right, so it's already to the right. I'm going to do another duplicate. Duplicate. Oops. Right-click. Duplicate. Okay, all I'm doing is I'm making 4 lines. Don't worry about where they're at. This is what yours will look like. Right-click, duplicate. Okay, so now what we're going to do is now I'm going to click on this first one. I'm going to go to Edit Properties, and this is where I'm going to change the numbers. Change the numbers. So we did 2. Sorry, y'all might hear my baby crying. Let me just look really quickly. It was, sorry, y'all definitely hear my baby crying. 280. Let me write that down. Sorry. I was looking at my real money. 280, 282, 265, 263. Okay. So now on the chart, you're just going to go any one of them, right-click, Edit Properties. And let's do this first one. I like to do the one I bought in blue. So in this case, what I'm going to say is the 282, because that's the call that I bought. So the 282 is going to be blue. Okay, and you could even show here, show price on the left. Boom. Okay. Now the next one, I'm just going to right-click, Edit Properties, and I'm going to go 280. 280, I'm going to make that red. And what I like to do with the leg I sold is I like to make it dotted. That's just me. Show on the left. Okay? So 280, dotted, boom. I'm going to go to the next one, right-click, Edit Properties, and I'm going to go here. I'm going to do the put side. The put side, I sold the 265. That's the put that I sold. Okay, so I like to do that dotted, 265, boom. And let me show price, sorry. Edit Properties, show value, boom. So then the next one, I'm going to right-click, and I'm going to do Edit Properties, and that one is going to be the 263, and I'm going to leave it blue, line, show to the left. Boom, there it is. That is our iron condor. Y'all can make it any color you want. Okay, but y'all see how I do it? So here's what we want to happen. Price to stay inside. It can even go out as long as it comes back. Okay, so this is how it should look on your chart. Just like that. Any questions on that? So we're good to go. That's the iron condor. We put it on, and we've got 7 days to expiration. So we're good. Did I sell the wrong one? God dang it. Oh, I was doing it for illustrative purposes only. Oh, crap. Sorry, guys. Oh, wait, what is that? We did the right one. 21 days. Hang on, February 27. Yeah, I don't know why it says 7 days to expiration. Maybe that's another one we had. Oh, that was one we did last week. I never moved it. Sorry. You guys can... Oh, crap. I never made those things. That's what it was. Again, I'm getting confused because it's my paper money. But bottom line is, you know how to do it. Just put your stuff accordingly. So we do have all our weekly iron condors. I just never made a... Okay, my bad. Oh, this one is that one we did in class that day for Illustrator. This is the one we just did. So the bottom line is my numbers were for the first one. Doesn't matter. This is our numbers that we just did. Okay. Wait, two more. I think we have another one down here. We have another one. Man, I thought I didn't do it in paper money, but I guess I did. Weekly iron condor. Here we go. So right here. Here's the one we just did. Sorry about that, guys. Same thing, though. You guys, 21 days. Here's the strikes that we did. So just put those on the charts. Here's all of the ones that we've done. So I didn't think we did it in paper money, but I guess I had never just moved them up. I got so much stuff going on in paper money, I guess I didn't realize it. But here's the one 7 days. Here's the one 14 days. Here's the one 21 days. So just do the same thing I just did, but put in the correct numbers. Either way, we're good to go. That's it on that one. Okay, so here we go. Get them all. I want to 30% in 21 days is equivalent to 521% per year with an 805 probability to put these trades. Exactly. This, again, it's boring, but you just follow your numbers, get your credit, and you move on. And again, I'll be putting this section in the membership, just this. But the key is, guys, the lines that I just did, that was for the first one. So, right here. That was from the first one. So just put the correct ones. Draw them on your chart. You don't have to, but it's easy for me to remember. Okay, 80% probability, huge. Now, I sent some alerts. I wanted to check this out, guys. I want to show you some because Guillermo had a question. Here's the alerts that I sent yesterday. Cron, let's take a look at Cron. Cron's taking a beating, so we're doing good on this one. I put an alert. Symbol Cron looks like it's topping out. Aggressive entry, March 17 put. And I gave you a range. Now, what this is this is a limit range. This is the key. The reason why I give you a limit range, the limit is what we're willing to pay. So what I'm telling you, when I put this range, I'm telling you pay 140 all the way up to 155. Don't pay any more. So it's your call where you put it. You can pay 145, whatever, 150, but what I'm telling you with this range is don't pay more, okay? But when I start with the 140, that's what I'm looking to pay, okay? So what I was telling you in this was symbol Cron looks like it's topping. March 17 put, limit range 140. Tight stop, 50% on the option, or if Cron trades above. So I put that right here, okay, because I want to show you how to do that. Because this is the alerts that I'm going to be sending you, and you don't know what to do with it, okay? No good. So what I'm going to do really quickly is I'm going to move this on the other screen so that way I can put the numbers. So y'all write that down really quick or take a screenshot. Because I have to make sure y'all get this. And I want to also understand why I did it. Okay, so let's go over here to Cron. Now I'm going to go back to my other study set that I used. I think it's that one. Wait, what's that one? I changed the study set for the Iron Condor. So now this one, sorry. So we can take a look at Cron. Everybody good on Iron Condor? I like what you put in there, Roth. Yeah, it's an 80% probability. So if you 30% in 21 days, yeah. Again, are we going to win all? No, it's an 80% probability. 80% probability. Means we're going to lose 20. Now, for those of you in my Forex, I told you today, we are crushing it. I told you about the British pound. You should be rocking. Now I'm telling you, watch the Aussie for a reversal. Okay? But here, let's go look at Cron. I want y'all to see what I saw and why because again, this is technical analysis, right? Cron's down this morning 6.32%. So here's what I saw in Cron. Why I alerted. Number one is, these are my studies at my charts. I have the 1 hour and I have the daily. Now this is a technical analysis class, right? So I got stuff filling everywhere. It's a technical analysis class. And so what we're doing is we're looking at patterns. And what I like to look for are extreme areas. Extreme areas. Extreme tops and extreme bottoms. Okay, that's what I'm looking for. So when I always start my analysis on the daily chart. Okay, so one of the things that I do on the daily chart is I see that this is going to a higher high. Okay, it's extended to the upside. Also, what I'm looking for is, this is the RSI. Okay, now I have 7 days on the daily. On the hourly, I have 14 days. Okay, that's just what I like. But the RSI 14. So what this is showing me as number one is I can see on the daily chart, this is high. Now, all my moving averages, okay, this is the 13, this is the 30, This is my exponential, exponential. So all of these are going up. That tells me it's an uptrend. It went to a high. Now, prices don't always go straight up or straight down. So one of the things that I look for is this zone. When price starts to come up in this zone, this is two indications. One, that it's strongly bullish, but also that it's overbought, right? This is the overbought. This is the RSI indicator, the relative strength indicator, okay? Let's go here to, let's make this 6 months so y'all can see it a little better, okay? So look at this historic rise. The last high was right here. Okay, it broke the high and it's been going up. So what like I said, what I first look for is in this zone. Once price comes up in this zone of this RSI, then I really start to look at the hourly. Because once it comes up there, that's telling me that doesn't mean it's going to reverse right away. But what it's telling me is that it could reverse. It could, right? Possibly. So then once I go through my charts and I see that, then I switch to the hourly, right? I look at the hourly chart for reversal patterns. Reversal patterns. So when you're going through your stocks, and I'll come back to Cron because I want to show you how we input that. Like, let me just show you. Here's a watch list of stocks. Okay, now this is a different watch list. So I just go through here each watch list, and I say to myself, so if I would have looked at this here, I would have saw that it was in the upper zone. Okay, that's the first thing I want to do is look to see where it's at. Now, it's not in the zone right now, but if this comes up a couple more days, here, it's going to be in the upper zone. What I'm looking for with this RSI is I want to see the signs that it could have, that the momentum is going to roll over when it's overbought. So once it comes up in this area, I'm going to shift to the hourly, and I'm going to look for a reversal pattern to the downside. Now, just so you know, this is what you're looking for. You're looking for these higher highs. I think the perfect example is, it was Cron. We'll go back to Cron. Let me jump into my real money. Paper money doesn't work sometimes. So let's go to Cron. See how it's way up here? It's a high. Okay, remember, we're looking for higher highs. When a trend goes up and pulls back to a higher low, we're looking for it to break that area. When it breaks that high, once it breaks this high, that's when this line's going to start to shift up in here. So what you're looking for, see this high? It went down and it broke through the high. And then it went straight up. Straight up. Okay, so when it's going straight up, again, that means it's starting to overextend to the upside. I want to catch the reversal to the downside. Okay, look at the SPY. The SPY is the stock market. Look what happened, guys. This is the daily chart of the S&P 500. Price went up, pulled back, broke through, and now it's going straight up. So look where we're at. We're in this zone. So this is telling me we're overextended to the upside. So now I'm going to be focusing on this chart, which is the hourly. And if I see a reversal pattern on the hourly, which I don't see yet, that's when I'm going to look to get in, okay? I'm going to look for reversal patterns to the downside. And again, don't worry, I'll alert you, but let's go back to Cron. So looking at Cron. Cron was overextended to the upside. I knew that. So then I came over here. Now you guys know from the classes that I've been talking about is I've got this 13 moving average. One of the things that I'm looking for is this 13 moving average to cross the 30. If it crosses the 30, that's a bearish indication, strongly bearish indication. This is the hourly. So just so you know, when the 13 hourly moving average crosses the 30, it's extremely bearish. Now, I jumped the gun a little bit because for me, when I sent you the alert, it was right here. What I like to do, okay, what I like to do, and this is one, and I remember what I put it in there, aggressive entry, right? So right here, I told you, well, I told you on this one right here, where's that at? On the chat, right here, aggressive entry, aggressive. Don't put a lot of money into these trades. Don't put a lot of money into these trades. These are, they're aggressive, but when they work, they pay big. So in this case, I was telling you to put at a maximum $155. Maximum. Okay, don't go risking $1,000 or $2,000 in these option trades. You risk small because the percentages when you hit them are big. That's big time. So what I said was, go back over here, is looks like it's topping out. Looks like it's topping out. So where I saw that was right here. This price, which is right here, closed below my purple line. The purple line. And remember, the only reason I was even looking at this, the only reason I was even looking at that was because it was in the overbought area and it was at a higher high. That's the only reason I was looking at that. So when price closed below this purple line, that's a potential indication of weakness. So at that time is when I decided to buy a put. That's when I sent you the alert. To buy a put. And because it was an aggressive one, and I'm trying to call the top, that's why I just bought one put. Now, look what's happened ever since. It went down, it bounced up. Now, this has not crossed yet. Okay? This has not crossed. But if it does continue to go down and cross, that's going to be really good for this. So what some of you might do is when you get that crossover, that's more confirmation, you can, somebody type in the chat, when we're going to the downside, when we're trading bearishly, let's see how good you are. Per our discussion yesterday in options, what are the 3 things that we can do bearishly? So when we're trading bearishly in options, what are the 3 things that we can do? Like strategy. And I'll give you a hint on one. We buy a long, what did I alert you in the chat? A long call or put? A long call to the downside? This is going down. This is topping. We can buy a long put. That's what I alerted you to. And the reason why I bought a long put was because if this works, it's going to pay huge. Huge. Now, what is another thing that we can do to the downside? Long put, we can do what? We talked about this yesterday. Remember, take notes on all this stuff. What is another bearish strategy when it comes to options that I can do? How about this, since nobody's typing in? A bear call spread. Y'all remember that? A bear call spread. What is our iron condor? Bear call spread and a bull put spread. What's the third thing we can do? If we're going to sell a bear call spread, we can buy a what? A bear put spread. So somebody type in the chat. would it be beneficial if I made a little video on each one of these that explained how to sell a bear call spread, how to buy a bear put spread? So this way, when I say, guys, you can do a bear call spread, and you're like, what the heck is a bear call spread? You can go to my little video. This is bear call spread. Here's your choices. Long put. This is the most aggressive. This is the least aggressive. And this is right in the middle. So what I did was I bought a put right here. It's an aggressive, but now I also gave you guys a choice of stop loss. If you look at the stop loss, what I said was stop loss 120.46. Hang on. That must have been a question right here. This is what I said. Let me right click this. Create. This is what I said. Oh, that was the alert I gave y'all the other day. It was right here. That's what it was. So it was a 50% stop loss on the option price. And then, or if Cron trades above. So what I did was, again, I'll show you. What I did was, in real money, is I put a line up here. I drew a line just like we did a minute ago, and I right-clicked, and I edited it, and I put 25.30, and I made it red. I want to visually see what my stop loss is. Visually. 25.30. Right? Now, that's one choice. The second one is or 50% of the option. So I'm going to digest this real quickly. But I just wanted y'all to see why I alerted you. If this crosses to the downside, then I can add to the position, or I can now sell a spread or do another strategy. Because what I like to do is I like to leg into these positions. This is an aggressive. If this crosses, I can take another entry. And if it pulls back up and rolls over, I can take another entry. Okay? But that's the logic behind that. So now, when you go to the trade tab, this is where I said, in the trade tab, we're going to buy the March 17. This is the whole, I'm getting around to that whole question. The March 17 put, when I alerted you, you could have done this. So now, if you're not in this trade, you're waiting for a second potential entry. And I will alert you if that happens. Okay? So here we go. March 17 put limit range. This is what you would have done. Let me do it in paper money in case I can really place the trade. I'm not going to do it again in real money. So we go here and we're going to go to Cron. Okay, so you'll pull up Cron on your trade tab. The alert that I gave you was buy the March 17 put. So it's now what I'll do next time is because there's a bunch of Marts, and I think I'll do a little bit better job because I'm going to put the whole thing. I'm going to say buy the 15 March 19. I'm going to put the whole thing. I don't think I put the whole thing. I'm not sure. Let me see. Yeah, March 17 put. So that's what I'll do next time because this is the one that I was looking at right here. The March 19, 37 days to expiration. I'm going to put the full thing next time so y'all know. Limit range. So all I put was buy the March 17 put. So what I did was I went to this option chain and then I went to the 17 strike and I bought this put. I bought this put at 470. So at that time, y'all would have came to this strike, went to the 15. So this is how I'm going to write it next time. I'm going to tell you guys the 15 March 19 Okay? And then it was the 17 put. That's how, now this might confuse you guys. I don't want to confuse you. So this is probably how I'm going to write it. The 15 March 17 put. Because this just tells you we're in 2019. So don't worry about these. So it's going to be the 5th. So this is how I'm going to type it in the alert. March 15, 17 put. That's exactly how I'm going to type it in the chat. And that's this put right here. Okay? So what you do is you would right click, and in this case you're going to buy custom with stop. Right click, buy custom with stop. Now, if you see here, Guillermo, this is limit. Okay, the limit. So what I said was you're going to, and it was $1.40. Okay, it was $1.40. I don't think. Where the hell are the numbers at? Did I put the entry? Oh, I just told y'all to buy it because it was already giving us an entry. Yeah. The reason why I didn't put an entry price is because it was already at our entry. So you should have just bought it. Okay? But that's where you would have now. The limit price, this is where you would ask in the chat, what about the limit? I said in the limit to pay $1.40. $1.40. Okay, Cron. Wow. We're killing it now. Look what it's up now. It's at $4.50. That's huge. Because again, you should have bought it yesterday, which means I'm already really profitable in this trade because it's already went from, I told y'all to buy it for $1.40. It's already at $4. So I've already hit like a 200% return in literally like one day. But anyway, let's just assume it was $1.40. Then what you would have done was you would have changed this limit, Guillermo, to $1.40. So you would have put limit $1.40. And then you would have went to that wheel. Okay, so I went to the wheel. Right here, there's going to be a little wheel. So you click the wheel, and then you put your condition. At or, if I give you a condition, you're going to put at or below. Now, I didn't give you a condition because it was already entry. But when I give you a condition in the chat, for example, right here, I tell you an entry price, TLT. I told you buy, how about we do that one? I told you to buy the 123 call with a limit range. Let's just do that one. Because again, y'all, this one's already went way past. It's kind of pointless. I'm already up like 400% or 300%. So let's go to TLT. Same concept, right? So let's take this alert that I gave you. TLT, and I even told you right here, it was a 3-8 crossover, the strategy that we talked about yesterday. It was a bullish setup. The 3 crossed the 8, and it was above the 20. We talked about that yesterday. Here's the entry, 121.17. Oh, man. Okay. Maybe that's why. Yeah, you're right. Man, I'm sorry. I got many windows. Yeah, you're right, Ashley. My bad. All right, you're good. It's hard. Trust me, it's hard to multitask. You got windows open everywhere. I was on the call side, guys. Sorry. It was the same thing. It was a 17 put. My bad. So it's at 170. So it's only up like 40%. Sorry, man. I got multiple windows, and it's a little bit more difficult. But yeah, we were right. It's a 17, but I was on the put side. My bad. Yeah, I wish it was for you. So right now, that's at $1.72. I bought $1.30, so it's up like 30-something%. Okay, I'm sorry. Only 30% on one day. So you're right, Ashley. The put side. My bad. TLT. Let's go back to TLT. TLT is call side. Okay, because I wanted to go up. So right here, we're going to buy the 123 call. So that was right here. It was this area, and it was the 123 call. So you would have went to the 123 call, and you would right-click, buy custom with stop. Okay, you can actually still do this because it's at 68 cents right now. And so what I'm telling you is don't pay more than this. So we're going to go ahead and input this trade again in paper money. Okay, yeah, 30% in one day. So I'm already in this trade in real money, but I'm going to put this trade in right now in paper money. Okay, so we'll do it together. Entry 121.17. If you haven't done it, now you can do it for practice. 121.17. So let me write that down so I don't have to keep going back and forth. So 121.17. Okay, here we go. So we're going to buy The March 19, 123 call. March 19, 123 call is right here. Right click, buy custom with stop. Okay? Now, limit price, this is what I told you in the limit price, 73 range to 76. So I'm going to go here and I'm going to type in 73. Okay? That's what I'm willing to pay. And this is going to be a market order. Okay? And this is going to be good till cancel. So what I did was TLT, I changed this to 73 cents. We can do this right now. Limit order, mark. So far, that's the alert. Now, the part, so that's how you type in the alert. But then there's this part right here. Conditional order. You have to add a condition. You have to add a condition. 121.17, here's how you do it. You go right here to this wheel. And then you're going to go click right here. Method, mark, at or above. At or above. That's your condition. What was our condition? Our condition was 121.17. Let me just double check that. 121.17, okay? So that's how you do that. You add the condition, and you're willing to pay 73 cents or $73. Right-click. So now we're going to add our stop loss. Our stop loss is 120.46. So go back over here, go to the condition, you go market, condition, at or below, what do we say? 120.46. At or below 120.46. That's our stop loss. Okay, TLT mark at or below 120.46. So this is what it looked like. So when you got that alert, I gave you the strategy. If you wanted to place this trade, that's my entry. This is my buy range. So that conditional order is 73 cents, mark at or above 121.17. See, it fell back below 21.17, so you're not going to get filled unless this stock goes back up two pennies. Okay, and my stop loss is at or below 120. So what I'm willing to do is I'm willing to put at risk $250. That's me. $250. So what you're going to do is you're going to take your risk. In my case, it's $250 divided by 73. $250 divided by 73. And that is 3.42. 3.42. So I'm going to round down to 3. So I'm going to go here, 3, and I'm going to hit this little gear, 3. When I hit confirm, I'm going to pull it over and I'm going to read it. Buy 3 TLT, March 19, 123 call, 73 cents, triggered by mark at or above 121.17. And I'm going to sell those if it goes below 120.46. So that's how you set up the order. Okay? Because the question was, how do you do the limit range? You can't put both, but I'm going to start with the small one. Okay? And if I don't get filled, I'll work it. And then I'm going to confirm and send. It's not going to fill yet because if you can see, the price is 3 cents under. Okay? That's how you do that. But the whole key in all that is, and again, that was a different strategy, but look at Cron. Cron is working beautiful. If you take a look at the paper money, went to the top, I saw it in the upper zone, I looked for a reversal. I saw it break this. First opportunity. If this crosses, second opportunity. Then if it goes down and bounces back up and rolls over, third. You can do all 3 different strategies, and I'm going to do a video explaining each of the bear strategies. So when I put an alert for you guys, and it says option play, symbol, whatever, I'm going to tell you right up here, I'm going to say you can do a put. So like I will put, next time I'm going to put, you can do a put, bear call spread, or bear put spread. And if you don't know how to do that, you're going to be able to resort to the video on those strategies. Because it doesn't matter to me which one you do. I'll tell you in full disclosure the one that I'm doing. Okay, and I did the put. Simple as that. Go through your watch list. Well, I got a lot of stocks up, a lot of stocks down. Look at that, CB. So like, for example, if I go through my watch list and I just go up here, what I'm looking for is I'm looking for it to be up here in this zone. Okay, if it's not up in that zone, I'm just passing. See, look now. Here's a perfect example, guys. We did this on the fly. And then we'll end with this one. Right now, it's in this zone, right? That tells me two things. It's strongly bullish, but this is the overbought area. This is the extreme on the RSI. And I can see it because it's going up. But what goes up eventually comes down. Eventually. It has to. So somebody tell me, and this will make me at least feel like this whole thing was even worth it. Here's the hourly chart. If you look at the indicators, this is in the upper area. This is going up. So this means it's extended. You guys know this is my favorite setup. You guys know this. Look at the green. This is what we've been talking about for days. Days. This setup is incredible. Look. And you guys notice. I like this because I see that it's extended. This is going up. It's going to roll over eventually. This is going to roll over eventually. This is strongly bullish. The 200 moving average is down here. This is real time. You guys want to make money? This is real time. So somebody please type in the chat. What is going to be my first indication that this might be shifting to bearish? Aggressive entry. What am I going to be looking for on an aggressive entry? It's the last thing I do. Hopefully this whole discussion was worth it. What is the first indication? Yes. Look what Guillermo put in. The price crosses the purple. If I see price cross the purple, that, again, doesn't mean that it's going to change. But that is my first indication that it might roll over. So then I'm going to be watching the red line. And if the purple crosses the red line, entry number 2. And then if it pulls back, and now this moving average acts as resistance, bear flag, or Rafa, ring high, right? Entry number 3. And my target, I'm going to be watching it all the way down to here. I just kind of told you, it should be green. That should be green. This is what I'm waiting for on every single chart that's going up. That doesn't mean that's going to happen. It might go like this. It might go up, just like this, form a double top, and then roll over. I'll alert you then. But put this one on your radar. LMT. I think LMT is Lockheed Martin. Isn't that Lockheed Martin? LMT? Lockheed Martin. And look at the chart. It's like a rocket ship. Okay? This is the picture you guys need to engrave in your brain. And how do we come to that conclusion? Very simple. We came to that conclusion because it was in the zone on the daily chart. Damn, I'm getting stuff filled. Oh, we got filled on that TLT position. So if you guys put in that TLT position, we just got filled. Or like me, I got filled this morning. Anyway, that's what I'm looking for. We had a really long class today. Hopefully it was valuable because, again, and I'm also going to be I'm making a note right now to do little videos on each one of the strategies. So that way you'll have all those in the membership area. So when I alert you and I say, you can buy a call, do a bear call spread, whatever, you're going to know how to do that. But put Lockheed Martin on your radar right now, okay? because it's setting up. So, all right, guys, we did iron condors today. We talked about your questions on how to place the limit order with the condition. We even just kind of briefly looked at a couple charts, but that's it. That's all you guys got to do. But the key is practice, 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 and type your questions. Because if you don't type questions, how can I know how to help? If you type me a question or send me an email with your question, I'm going to make a video on it, and I'm going to put it in our membership area. And that way, if you have a question, you can just resort to there. I got stuff filling everywhere. So anyway, that was quite a bit, but good. Hopefully you put in your iron condor position. We got filled both in paper money as well as real money. The fun's going to begin, guys. Our other ones are going to be expiring soon, and then we're going to be just collecting income every week. Go on from there. I did not promise you earn a profit if you purchase a stock or a bond. If you're going to trade, please do so with caution. We looked at the paper money platform as well as my real money platform. No recommendation to buy or sell. Everything was for illustrative purposes only. Again, understand the risk involved. Practice, practice, practice. Nothing was for endorsement purposes. But again, practice, because the information that I gave you today, if you're paying attention and you practice it, could ultimately change your life and put you in a position above almost everybody else because it works. Let me stop the recording. And we went.